Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute. We got a breakout, and it's not the S&P. But before I get to it, if you're watching this on YouTube, please click the link below and subscribe. Like and subscribe if you're watching from our website. There's also a link below to direct you to YouTube, and you can subscribe that way. We'd love you to follow us. We'd love you to help us build our following. Yes, the S&P didn't quite get to 4,300, and that is the big level. We need to not only see above 4,300, but really, I mentioned yesterday, two big levels of resistance that are highlighted in our Morning Express, and the first one is a rare major 4-star resistance, and we need to get out above those to really to start securing a breakout in the S&P. Now, the Russell 2000 is a different story. We got out above yesterday's highs and ripped up to a halfway retracement at 1864, the high in the session. And for all intents and purposes, this is a breakout of that bottom range as we work through that regional bank crisis. The high from yesterday, 1843, and the settlement from Friday, 1838, that is now support. And the Russell 2000 has gotten out of that range. It's broken out of that range. As long as it stays out above there, this thing is a path of least resistance higher. Now, we saw that reversal yesterday on the open when we went back and it stuck its nose back below 1800. A little bit of the recession trade took hold, and it's sort of now we're not quite ignoring the recession trade, but regional banks are trading very well today, and we've seen a very solid move in the small caps. However, you have the S&P still kind of languishing and consolidating, which is healthy. It's actually building a little bit of a bull flag right now, and the Nasdaq is down on the session despite some strength from AMD, and just I think we're still digesting the big run, and that's healthy. I pointed to that in the Morning Express and said the path least resistance has been higher. This is a bull market. The trend is in a bull trend, and as we consolidate, if it's healthy, it's a healthy consolidation. The trend will resume, and that's what we expect. So holding out above 42, as low as 42.40 in the S&P is fine. The Nasdaq, I have some levels highlighted in the Morning Express, so check it out. Moving on to crude oil. It responded to big support at $70, not just psychological support there. We have a number of levels that converge at that mark. We're seeing a little bit of a lift off, not a whole lot of volatility after the short-term energy outlook release from the EIA. They did cite that they expect inventories to fall after the OPEC announcement on Sunday. They also expect prices to be a little bit higher, but they did lower their growth forecast, the GDP forecast. So there is a lot to digest there, not a lot of volatility. It's really the focus is going to shift to the inventory data, which we have some expectations started to trickle out. EIA is tomorrow. Of course, the private API survey after the bell today. It's going to move things. Consolidation here is good. Remember, we really came off of a big rally last week, but we did fail on Sunday night at that $75 mark. A lot of overhead resistance. A consolidation out above 70 is healthy, but we need to get back above 72 in order to reinvite some of that buying that could come back in. So again, same thing with the stocks. As we're seeing in crude, a consolidation here could be healthy. However, we do not like the reversal on the week, and the weekly tail that's potentially building here is not something to be ignored. Moving on to the metals, gold and silver have shown some pretty solid life here, working through that dollar strength. I mean, early on the session, you saw some dollar strength, and gold was really hanging out above 1980. I think there's some solid underlying strength that is brewing here right now. Silver hanging in all right too, but definitely being a laggard. Copper showing some life. Platinum showed some life yesterday. I have some levels highlighted on the Morning Express, but really what you're looking at is Friday's settlement. Remember Friday's settlement, and after the non-farm payroll, gold just could continue to bleed lower, and it bled lower into Sunday night trading. That level of settlement, 1969. We got to hold out above there in gold. We start breaking below there. It did not break below there today. 1970 was the low and responded. If we start breaking below there, that's going to be a failed rally attempt here on the week. So stay cautious with gold if it breaks 1970, but there's definitely some underlying strength brewing. Watch the U.S. dollar, but also watch the Chinese Yuan. The Chinese Yuan did go back up, and I highlighted in the Morning Express, did go back up, or the U.S. dollar against the Chinese Yuan did go back up and test that high. So if it stays up there, that means U.S. dollar strength and Chinese Yuan weakness. If the Chinese Yuan continues to weaken, that's going to be a big headwind for gold and silver. But our team's here to help. Don't hesitate to reach out, 312-278-0500. Remember, futures trading involves substantial risk of loss. It's not suitable for all investors.